So for those of you who decided to be self-sufficient and execute on yesterday's money-making game plan that I gave you, you should have had a phenomenal green day on the day, making hundreds of dollars, if not over $1,000, or multiple 100% profit returns if you did end up buying those SPY call options. I made it very, very clear that if the market is reacting bearish at 583, if the market is opening up lower with a gap down, we're going to be focused on buying call options at the 580.80 level. With that being said, that was the exact lows. And there was a very strong green bullish 30-minute confirmation in the pre-market to consider buying call options directly at market open. There was also many green bullish 30-minute candlesticks during normal trading hours into the open. With that being said, I'm going to be walking you through the trades that we ended up making today. We ended up having multiple 100% profit returns on SPY call options. I'm going to be breaking down the trades towards the end of this video. First things first, let's get straight into the new money-making game plan, man. For those of you who are serious about learning how to trade, I'm gonna walk you through and show you exactly how to master the SPY towards the end of this video, recapping the overall trades and market. But we're gonna get into the new money-making game plan, starting off the video hot here. Let's get straight into it. So in terms of what I'm seeing on the weekly chart, this is the weekly chart of the SPY. Each candlestick represents 1 week's worth of price action. In terms of what I'm seeing on the weekly chart, I'm seeing this similar pattern. You can see right here that the SPY has this green candlestick facing to the upside, and then it has this green candlestick facing to the downside. And then you can see right here, the SPY has this green candlestick to the upside, and then this green candlestick, not exactly identical, but very, very similar, almost facing to the downside, right? You see the similarities in that sense. So with that being said, in terms of one thing that I'm seeing on the weekly chart, if this repeats itself in terms of the SPY, if we are pushing above the previous week highs, it's going to likely be a phenomenal opportunity to be buying put options on the SPY, especially if we are gapping up and especially if we're seeing those red bearish 30-minute candlestick confirmations. So the first overall game plan based off the weekly chart in this daily chart pattern that I'm about to show you, especially if SPY is gapping up, I'm going to explain to you why that's important. But the first game plan is going to be the following. If the SPY breaks above new all-time highs, we're going to be looking for a 1 to 2 point zone with bearish 30-minute candlestick confirmations to be buying puts. So the zone is going to be 587 to 588. There's also been a recent short-term trend where many times the SPY has had nice short-term pullbacks once it pushes 2 points above the new all-time highs. So 587 to 588 is going to be a put zone, especially if the SPY gaps up. That's going to be a strong foundation to be buying put options for a new all-time high short-term pullback. With that being said, in terms of the daily charts and why that gap up would make the trade even better, would be the following. Based off the daily chart, this is what I'm seeing. I'm seeing the green, red, green pattern currently occurring on the SPY, right? So this is gonna set you up as well for tomorrow's new game plan. I'm gonna walk you through this here. So in terms of the SPY, you can see right here, I'm gonna walk you through this. We have the green, red, green slanted to the right side. We have the green, red, green slanted to the red side, right? So in terms of this day right here, you can see in terms of the SPY that it ended up having a massive gap up, right? This was the day where we absolutely crushed it and made like a 200% return on puts within 6 minutes. So based off of this pattern, you can see right here, green, red, green, slanted to the right side, we have a similar pattern. So if the SPY has a massive gap up, along with that weekly chart pattern, I'm going to be very focused on buying put options if we are breaking above those weekly highs. If we are pushing above new all-time highs based off the daily chart pattern, if the SPY is having a massive gap up, it's going to be a great opportunity to buy put options, ride it back down to fill the gap below. And then once the gap fills, it's going to try to spike and try to have a reversal, which would be a great level for calls only if the SPY has a massive gap up, right? So that's the plan. If we're having a gap up, it's going to be put option focused. Now, in terms of what else I'm seeing, right? So in this particular situation, the green, red, green pattern ended up forming, and you could also see the green, red, green pattern ended up forming here as well. The main difference is going to be the slanted to the right side, right? So this one's more similar in a sense. So on this day, if you look at the previous closing price, 568.86, and then the next day it ended up opening up slightly lower at 567.36. This is going to be the next game plan. If the SPY ends up gapping down, I'm interested in buying call options towards the lows, right? So if the SPY is gapping down, if it's a small gap down into the open, This is going to be the levels where I'm going to be watching for call options. 581, 581 to 580.40 to 581.40, right? 580.60 would be a great level as well. So 580.60, 581, 581.50. If the SPY is gapping down, I'm interested in buying call options at the lower zone. If the SPY is gapping down, it could potentially top towards that 584 overall level. So if we're gapping down, keep an eye on 584 potentially for puts, but I'm mainly interested just in the call opportunity if we are gapping down, because it did end up closing fairly strong. But the main game plan is if we're gapping down, calls at 581, you can keep an eye on puts at 584. Now use strong 30-minute candlestick confirmations, right? Now, in terms of the SPY, if we're just opening up flat, then that previous closing price is going to be make or break. If we're just opening up flat and nothing much is going on, 583.32 is going to be make or break, right? So I gave you the strong foundational sequences in terms of what it is that I'm looking at in the game plans for the gap up or the gap down. If we're opening up flat and you are seeing green bullish 30-minute candlestick confirmations at 583.32 and you are seeing a break above 584, look, man, the main key level is this. If we're opening up flat and the SPY is just kind of holding 582.50, to 583, it's not really gapping out or gapping up, it's just kind of sitting in that zone. The main play would be this. If we're opening up flat, 584. If we break above 584, turn that into support, it's going to have a strong bullish day. That's what it ended up doing in terms of that pattern last time. It is slightly different, but just keep an eye on that, man. So I walked you through it in terms of, those situations, the green, red, green, right? I'm walking you through all these main patterns. So just be aware of those overall situations within the market, man. Because I'm telling you, you can see right here, you had the green, red, green. And then the next day, it didn't do too much. In terms of the previous closing price, it was 573.17. And it ended up opening at 573.16. So it opened up flat. It had a small drop. So what I'm telling you is the third game plan, if we're opening up flat and we're just holding above, like 583, above 582.50, the main play is going to be calls 583.34 and 584. The big move's at 584. If we break above 584, drop back down and retest. If you're seeing green bullish 30-minute candlestick confirmations at 584, is gonna run and it's gonna try to close strong and bullish, and it's going to try to push for those new all-time highs, right? So in terms of the ladder, 584, next level is 585, next level is 586.30. I gave you the best levels for calls. Those are the three game plans, right? So I gave you the game plan if it's gapping up, I gave you the game plan if it's opening up flat, and I gave you the game plan if it's gapping down. Use those plans, write down everything it is that I just said, and you should have a phenomenal green day. Just make sure that you're using the 30-minute candlestick confirmations. Make sure you're analyzing the pre-market chart as well for the proper confirmations with the plan, and be disciplined and be patient and wait for the best setup to come to you. Now, let's get straight into the education, man. I'm going to show you, man, this is exactly how you should have seen the market today. If you watched last night's video, I made it very, very clear and explained to you on why this overall zone, this was the zone right here. The higher level on the zone was at 580.80, which was basically the lows on the day. The lower level on the zone was at 579, right? So I gave you overall yesterday's levels. This was like the best levels to be buying calls. It was literally towards the exact lows on the day. Now, in terms of confirmations, was there confirmations to be buying SPY call options at the overall level? Because I made it very clear in terms of the game plan, if the SPY gaps down, if the SPY is opening up, reacting bearish, you're going to want to buy call options at those levels. If you're seeing a confirmation at one of those call levels, right, 580.80 or 579s, you're going to want to buy calls. So what was the confirmations? In the pre-market, it was doing nothing but consolidating and holding the level and trying to break out. That's a bullish signal. You have all these bottom wicks. Remember this, right? You have all these bottom 30-minute wicks, bottom 30-minute wicks, bottom 30-minute wicks, bottom 30-minute wicks, bottom 30-minute wicks. This is all very, very bullish. You have an attempt right here. This is resistance right here. It's breaking above resistance. It's closing these 30-minute candlesticks above the previous resistance, right? Look at the patterns. Green, red, green. It's bullish. It pushed a little bit higher. This is a very strong green, red, green, slanted to the right side, bullish pattern. This is a very strong green bullish pin. All the confirmations were there for you to buy call options at market open. So if you watched last night's video and if you implemented what it is that I've been teaching you, you should have said, it's been consolidating for a very long time at the level. It's been trying to break out above this resistance right here at 581.20. It's been doing nothing but forming the green, red, green bullish pattern. Green, red, green bullish pattern. This is a very strong green bullish pin. You see all these wicks, right? It's not going to be able to crack. It held too long. The green, red, green pattern is there. All the bullish wicks are there. It's bullish. So you should have been buying call options based off the game plan and based off the pre-market price action. Now, in terms of normal trading hours, was there more opportunities to be buying call options? Yes, there was many, many more. And I'm going to be recapping the trades that I ended up personally making, right? So in terms of another reason to buy call options, when this 30-minute candlestick closed right here at 10 a.m., you should have been buying call options on the opening of this 30-minute candlesticks because this is bullish and it's closing the 30-minute candlestick above the previous 30 minutes body right here, right? And it's forming higher support. This is all bullish. Also, in terms of more reasons to be bullish, look at what happened the day before. The SPY ended up gapping down. Remember I told you to buy calls at 582.50? 582.50 right here at bottom for the first time. It spiked to fill the gap. Look, there was a gap that was waiting to fill above at 584.50. The market opened up bullish and this 30-minute candlestick closed bullish, but the gap did not fill. Once it had that green bullish 30-minute candlestick at normal trading hours, it spiked back up to close the gap. You see how the same exact pattern is repeating itself? So you should have been even more bullish because SPY, once it recently gapped down and had a green bullish 30-minute candlestick, it spiked to close the gap. And then once it closed the gap and formed a red bearish 30-minute candlestick, it ended up dropping back down, just like it started to do today, right? So in terms of more confirmations to be buying call options, you should have been in on call options at market open. You should have been in on call options right here as soon as this 30-minute candlestick opened, because this was a green bullish 30-minute candlestick as well. Now, in terms of resistance and break and retest, I'm going to show you, man, this is exactly how you should have seen the market. This is a make or break level right here. You can see this 581.80 is make or break. If it reacts as a resistance, it drops back down to 580.50. If it reacts as support, it quickly spikes to 583.34. During the morning, it was nothing but green bullish 30-minute candlesticks, and it was nothing but SPY trying to close the gap at 583.60. All more reasons to be bullish. Now, in terms of the break and retest, the break and retest has to do with the pre-market resistance. So in the pre-market, you should have been looking at the chart and you should have been saying, okay, there's a lot of resistance right here on the SPY. There was even resistance on the first 30-minute candlestick, normal trading hours, right? All of this resistance is at 581.40. The SPY breaks above the resistance. So when it drops back down to the previous resistance to retest for the first time, it could potentially continue to bounce, which is a great opportunity to buy the dip for the breakout and retest strategy for the SPY to start to explode up to fill the gap, right? So with that being said, in terms of a confirmation, this was the confirmation to be buying call options. The same simple confirmations I've been teaching you. Go back throughout the past week's videos, watch all of them start to finish. You'll see this is the same exact patterns, right? This is how you should be viewing the market. You should have said there's resistance right here. It's trying to fill the gap above. And I explained to you all the reasons to be bullish before. Now, let's get into this confirmation, right? So I already walked you through in terms of, the opportunity to buy calls at open and the opportunity to buy calls again or just continue to hold because you have the normal 30-minute candlestick green bullish. So that's two opportunities for call options, right? Now, in terms of the third one, SPY breaks above pre-market resistance, drops back down to test. What's the confirmation that it's going to react bullish? Because anybody can sit here and say, okay, there's a break and retest strategy where SPY breaks above resistance, drops back down, and then it's going to try to react to support by the dip. That's too basic. That's too simple. You have to stack. So in terms of what we stacked the nightly game plan. There was a gap waiting to fill above at 583.60. We stacked that when it had that green bullish 30-minute candlestick on the previous day, next 30-minute candlestick, it exploded up to fill the gap, right? And it's extremely oversold. But in terms of the 30-minute candlestick pattern, I want you to look at this. Look at how simple this is. You're going to see how identical this setup is and how simple trading is if you just wait to trade the best setups at the best prices. So you have these two green candlesticks slanted, right? You see how they're slanted to the upside? So just look at these two green 30-minute candlesticks, right? This is so simple. You got these two green candlesticks right here, and then you got these two red candlesticks right here. Remember in the last videos, I told you this red trend reversal candlestick at the previous resistance. Remember this? We went over this. This is how you should have saw the market today. You have all this resistance right here. The SPY breaks above the resistance. It drops back down to retest the resistance. What's the confirmation to be buying? Look at the chart. It's the same pattern at an even lower price, and it's more oversold. There's a gap to fill above. You should have been all over calls. You should have been buying call options right here on the opening of this 30-minute candlestick. When this one closed red bearish in the middle, you should have been buying call options on the opening of this one at 12:30 p.m. Looking at this pattern. Two slanted to the green side, two slanted to the green side right here, and then you got two slanted to the red side. And this red candle is identical to this red candle. And if you go back throughout the previous videos, this red candle has formed many times on the breakout and retest where the SPY breaks above a resistance level, where the SPY breaks above the resistance level. You see the resistance, you see the resistance, you see the breakout, you see the breakout, you see the two slanted green to the upside, you see the two slanted green to the upside, you see the two slanted red to the downside, you see the two slanted red to the downside. Next hour, very bullish. Buy call options on the opening of that 30-minute candlestick. You should have been buying call options, boom, right there at 12:30 p.m. You should have been on call options, and history repeated itself in a very similar cycle. This time it ended up spiking for an hour and a half, closing to fill the gap. Those were the three trades that you should have taken advantage of. You should have been in on call options at market open. You should have been in on call options when the first 30-minute candlestick closed green during normal trading hours. And you should have been in on call options right here at 12:30 p.m. If you use what it is that I'm teaching you, you should have been taking advantage of call options with those 30-minute candlesticks, man. There is no excuse to be red. Losing is a personal choice within this market if you're using what it is that I'm teaching you, man. Who do you know is teaching you a simple 30-minute system that is working and printing at the speed of light? So that's how you should have read and viewed the market. And you can just see, man, it happened many, many times. Look at this. This is the same candlestick. If you go back and watch all the videos, it's the same fucking pattern. You have two slanted green to the upside, two slanted green to the downside. Previous resistance right here, and then it spikes by the dips. You have two slanted to the downside right here, and then it drops under the previous 30 minutes like it's been doing, and then it spikes and goes green and bullish. That pattern has repeated so many times. If you just go back and watch throughout the videos, man, it's so simple. Use a system that is simple. This is the best system, man. It's so simple, and it's getting you into the best prices. Why would someone complain about that? The strategy is so simple. It's so elementary fucking level, but it works, and it's getting you at the best price possible, and it's giving you 2 to 4 trades nearly every single day on average. And these are the best trades you could be making within the market with this simple 30-minute candlestick trading strategy that I've created. You don't see anybody teaching this because I'm the one that mastered this. I figured it out. I've tested every single time frame. The daily chart foundation, weekly chart foundation with the 30-minute candlestick, you know, in terms of normal trading hours. The macro for me is 30 minutes, and then the micro for me is 1 to 5 minutes, right? It's so simple. And then look, the same thing happens again. This is resistance. You see all this resistance right here at 582.60? SPY breaks above the resistance. It drops back down, two slanted to the red, two slanted to the red. Next 30 minutes is bullish. Two slanted to the red. Next 30 minutes is bullish, right? It's the same fucking pattern. So in terms of the trades that I ended up personally making, you guys are well aware. I focus on trading mainly during power hour. You know, during the middle of the day, I might make 1 or 2 trades, but I trade best. And then in terms of the system that I have, I genuinely believe the best time to trade within this market where it offers the highest risk to reward ratios with my overall options trading alert system is going to be the power hour trading session. This is when the contracts are extremely cheap. They're getting ready to expire worthless, and we're buying when they're out of the money, and we're literally selling them when they're going in the money right before the market closes, and the market's extremely volatile during the last hour power hour trading session. This is when I trade best, and this is the best time to be trading during the day. So I'm going to walk you through it, man. So in terms of my first trade on the day, it was call options. I ended up buying SPY 585 calls for 13 cents. I got in this trade at 1:57 p.m. This was the first trade that I ended up making in terms of my personal trade on the day. 585 SPY calls at 13 cents a contract, right? When I got in these calls, just a couple minutes later, they went over 30 cents a contract, man. Look at this. I'm gonna walk you through this. So in terms of this trade, I'm gonna pull up the option contracts for you, right? So I'm gonna show you 585 calls, and I'm gonna show you exactly where we got in on this particular trade. So in terms of this trade, I ended up getting in at 1:57 p.m. So this is where I got in. As soon as I got in, it ended up spiking. right? So a minute later, it had a small spike to 17 cents. And then from there, just a couple minutes later, it went to 34 cents. So the trade is up over 125%. So if you're up 125%, you set profit stops at the bare minimum, like 30% profit stop, and then you sell into the moves at key overall levels and you move the profit stop up. That was a successful trade, right? If you're up 100% plus on the trade, set the profit stops no matter what you think it's going to do in that sense. G-Roar made it very clear when I was in that trade as well to set the overall profit stops. So that was the first overall trade on the day. Then in terms of my next trade, that one was an overall L. I ended up doing 584 calls. That one did not work out. So I took another trade on calls. That one simply did not work out. Now, why did I buy SPY calls at 2 p.m.? You know, in terms of this first trade, it was very nice. It was 130% spike within less than, 7 minutes on that overall trade. So if we go to the candlestick right here on the 30-minute chart, you're going to see we're going to pull up 2 p.m. So in terms of 2 p.m., that is the opening of this one. The main reason behind that overall trade was just the strong green bullish 30-minute candlestick. I went back throughout the chart history and I noticed how it was slanted bullish to the upside. And the way I kind of viewed it was going to have one last spike, right? So it wasn't 100% the best overall setup, but just based on how green, strong, and bullish this 30-minute candlestick was, I wanted to get in calls in a sense just for a quick overall potential spike. And I did think it had the potential to go to 585, but it did end up going to 584.50. But even though the calls didn't go in the money, they still went up 130% within 7 minutes. So with that being said, I did end up buying calls again because I did think it was going to go at 584. The main mistake on that, I'll say, was it was a fairly overbought level. And, in terms of the gap, it filled the gap. So I'm buying at an overbought level. And last time it filled the gap, it ended up dropping. So it worked the first time. The second time, it did not work out. But after that, the trades were fucking just straight flawless after that. So I'm going to go over the next trades after that. So in terms of the next overall trades, let me get into this, right? So you can see this where I bought, shortly after that, I bought the 584 calls. That did not work out. So that was an L. But then after this is where I came back with straight vengeance, right? So 583 calls at 3:03 p.m. So as soon as power hour started, power hour opens up at 3 p.m. So power hour starts at 3 p.m. So I bought these 583 calls at 38 cents a contract, right? So if we go to 583 calls, you're going to see right here, this is where I got in. And in terms of where I got in, it was the exact lows. So I bought these calls right here at the exact lows you can see right here. And then in terms of where I exited, I ended up exiting that position at 61 cents, right? So that was a very nice percentage win. They ended up going to 140 fairly quickly, right? So in terms of that overall trade, the reason why I took that trade on SPY calls directly at power hour trading session, right? The setup was identical compared to yesterday. Like, look at this, man. This is so simple. Look at how simple this is. Look at the chart yesterday. SPY is going up, slanted to the green. SPY is going up, slanted to the green, right? 2 red candlesticks, slanted to the downside. 2 red candlesticks, slanted to the downside. Next 30 minutes has a small drop under the previous 30-minute candle, green and bullish. Next 30 minutes has a small drop, green and bullish. So I bought call options into the opening of that 30-minute candlestick on the dip because I looked at the pattern yesterday and I said, this is going to be a strong bullish 30-minute candlestick, right? The SPY is going to have a strong bullish potential move for an hour straight. That's why I was buying calls in that particular situation, even though it was reversing at the gap. You got to understand market restructure. It's forming higher support at this previous resistance right here. Previous resistance is right here. This was resistance for nearly 2.5 hours at this 582.60, right? It's nearly bottoming at that previous resistance. I'm not going to nickel and dime it. And based off the chart pattern, this is just so simple, man. Look at how simple that comparison is. It's identical. So that's why I was in calls for the power hour trading session. That's why we were playing calls, the same exact trade that I made yesterday. I made the same one today. Did you do that? Did you do the same exact thing that I ended up doing? I'm showing you how it is that I'm doing it. So you have to have your third eye open and capture in real time. I'm literally showing you exactly how it is that I'm seeing the market. I'm alerting every trade that I'm making in real time. Everything I'm doing, I'm documenting in real time. I'm explaining to you exactly how it is that I'm doing it. Obviously, it gets more advanced than this. I'm just teaching you, some of the basics, right? But in terms of these 30-minute candlesticks, man, it's fairly simple to trade. 30-minute candlestick, it's a great time to be holding a trade. And you can just see the 30-minute candlesticks, they tend to just close super bearish or super bullish. So you can kind of just hold it in a sense. If you want, you can break it down more micro with the 1 minute, 5 minute, and trade along with that 30-minute, right? But the pattern was just so identical to yesterday. You had all the break and retest. You had the gap. You had the slanted red hour, green bullish, right? Slanted red hour, green bullish. slanted red hour, green bullish. I mean, do you see that? It's just so fucking simple. Do you see the simplicity? I could have made this trade just based off today, not even based off of yesterday, but it was identical compared to yesterday. But just right here, this is resistance right here at 581.40. It breaks above the resistance, slanted red for an hour. Next 30 minutes is green and bullish, right? So this is previous resistance right here, 582.60, break above resistance, drops back down, break and retest on this bullish day, right? The bullish day where I told you to buy call options the day before the lows, remember? So slanted red for an hour straight, buy calls and open in the next 30 minutes. It's so fucking simple. You should have been in on call options right here on the open at 12:30 p.m. You should have been in on call options right here at the open at 3 p.m. It's like, dude, if you didn't buy the calls at 3 p.m., you're truly blind. You're truly trading the markets blind. It was the same exact pattern. Same exact pattern as yesterday. Same exact pattern as today. Resistance, break above resistance, slanted red for an hour, buy calls on the opening. Resistance, break above resistance, retest, slanted for an hour, buy calls on the opening. Like, what the fuck, man? You see how simple the market is? This simple fucking stuff can make you rich, man. Don't let anybody else tell you different. Nobody else is putting you on to this because they didn't create this. I'm someone who's actually real, who has something real for you that actually fucking works. You can use everything it is that I'm telling you and you can make money. Don't take my word for it. Implement it. Implement everything I'm fucking teaching you. Start making money. Tell all your fucking friends, tell all your fucking family about how fucking successful you're gonna be using this stuff when you're using it. Show them your fucking results. I'm telling you, I've tested everything. There's nothing better than this overall system that I have with the 30-minute chart. It is so simple and it works. It's fucking life-changing, man. But you gotta implement it. I can't come to your house personally and press the buy and sell button for you. I can give you the game plan a night before the market's open. I can give you the best levels to buy calls and puts. I can teach you the strategies to use at the fucking levels. And then you gotta, in terms of trading, the hardest part is the exit, especially with any system. The hardest part is really gonna be the exit, right? So you're gonna have to set profit stops. You're gonna have to measure the overall moves, basic support and resistance, time frames using the 30-minute chart. But I'm telling you, man, this is so simple. So if you look at everything I just showed you, based off of everything that I'm teaching you, there was about 4 amazing trade opportunities on the day. You had to have your third eye open, you had to be disciplined enough to wait for them, and you had to take action, man. If you're not educated, if you don't have the third eye open, if you're not disciplined, if you're not willing to take the risk and buy and fucking sell, well, nothing's going to change for you, dude. I can't personally come to your house and click the button for you. I just can't do that, man. I can do everything else, but I can't personally show up and click the buy and sell button for you. I'm just not in a position to do that, man. So with that being said, in terms of the reasoning behind calls, that's fucking why. And the winning didn't stop there because I looked at the previous day and the previous day said this can spike like for an hour fucking straight. And it already spiked. You can see right here, 2 slanted to the red. It spiked for basically 2 fucking hours almost, right? And then if you go back to the previous day, and this is just the past 2 days, if you go further back, there's even more times this worked. Just watch all the fucking videos. You're gonna see how many fucking times this works. I'm capturing these trends all fucking day. Do you understand? I'm milking these fucking trends to the fucking T. I will squeeze every single fucking penny out of fucking SPY, man. I'll milk all these fucking trends down straight to the fucking T, man. This shit works. Why the fuck wouldn't I? So in terms of, the overall move, if you just go back to yesterday, this is just so simple, man. We look at yesterday, 2 slanted to the red, and then green bullish hour, right? So in terms of one thing that was different, because history repeats itself in similar cycles with these trends, you could see we got the massive fucking spike, but it didn't close strong like it did yesterday. It ended up selling off. But if you set fucking profit stops and you sell into the massive fucking spike, you should have made 100% returns on all these fucking trades that I ended up making. So the winning didn't stop there. So that was a phenomenal trade on SPY calls. I bought at the exact fucking lows at Power Hour trading session, just like I did yesterday. This history just keeps on repeating itself. All this fucking winning, all this genius fucking information. I'm like, dude, I hope these people in the comment sections are genuinely taking advantage of this information. Man. This could change your fucking life, man. But it's your choice. It's your choice if you want to take action on it and change your life. I can't personally do it for you. But anyways, man, in terms of, 580.60 calls, you guys are well aware. I trade SPX during the Power Hour past 3:30 p.m. This was the first trade I ended up making on SPX, 5/860 calls at 3:35 p.m., right? So in terms of that particular trade, I ended up getting in at 3:35 p.m. and that one went up over 100% as well. So like I said, if you're up fucking 30 to 50% on SPX, well, it can drop back down at the speed of fucking light. You can lose it all. Set the fucking profit stops, sell into the moves. This is where I got in on that trade. 2 minutes later, the trade went from a fucking 100 to 200. That's a 100% return. And later into the day, it went even higher. It went to 280. That's a 200% return, right? So it held the $100 base, and the trade worked twice. You had two opportunities. You had one opportunity to sell for 100% in 2 minutes. You had another opportunity to sell for fucking 200% in about 10 to 15 minutes. So in terms of that trade, that was a great trade as well. And in terms of the next trade after that, let me get into this, right? So in terms of the next trade, and you could see I even added, man, I got my average down on that. I added at 65 cents. Average was 90 cents. It spiked to 300. It spiked to 280 a fucking contract. Those contracts dropped to 60 cents and they went to 280 within 15 fucking minutes, man. Now, in terms of the next overall trade, man, 5855 calls. So the next trade on SPX calls was at 3:50 p.m. Let's buy 5855 SPX calls at 255 cents. So I got in this one at 3:50 p.m. and then you're going to see as soon as I'm fucking getting on these trades, man, it's just nonstop fucking winning, man. Look at this. This is where I'm buying. I'm buying the exact lows on the dip. Look at this. The low is at 220. I'm alerting this trade right as this 1 minute candlestick is about to fucking close. The next minute, it just sits at this 260 mark. And then 3 minutes fucking later, it goes to 570, 250 to 500. That's another 100% gainer, man. Do you understand? 583 calls. Fucking, they went to 140. The SPX play before this went up 200%. The SPX play went up here, went 100%. Who the fuck do you know? Who do you know is teaching you this information, is learning everything that they're doing in real fucking time? Over here, we fucking trade. Do you understand? Trade ideas, trade plans, key levels, watch lists, all that shit is free. It's all fucking free. I'll give you the best game plans. I'll give you the best fucking levels. All that shit is fucking free. Don't watch anybody else. I got the best fucking shit. You understand? In terms of real-time trading, real-time analysis, when the market's open, that's in the private group. If you want the money-making game plans, you want all the fucking strategies, you want the education, it's like, dude, I'm giving it in these videos, man. Like I said, I'm not sharing everything it is that I'm doing, everything it is that I know. This is just an overall video, right? But with that being said, I'm putting you onto the game, and this shit works, man. You should be able, if you're using what it is that I'm teaching you, to make money and to become such a better trader, to improve so well if you're using everything that I'm teaching you, man. So start implementing it. I can't take the action for you, man. If you want to become better at trading, implement everything it is that I'm teaching you, man. You can study the evolution of this channel. You're going to see I was not trading like this. I was not talking like this. This is all fucking different. It took 10 fucking years to figure this shit out. With all the systems that I've created and everything I figured out with trading, this is what I've found to be works best. And we're learning everything it is that we're doing in real time. So in terms of those are my trades. Now, like I said, man, when we're up like 30 to 50%, just set the fucking profit stop at 30 and then sell into the moves. You can leave runners as well, right? Know the risks, man. If you're up 30, 50% on SPX, it can drop straight back down. Know the risk of fucking holding, right? If you want to aim for that bigger win, know the risk of going green to red when you're up 50%, right? So, like I said, the exit is the hardest part with trading. But in SPX, one thing you need to understand, if you trade SPX during the power hour trading session, you need to understand you can lose all the gains just as quickly as you make them. If you enter a trade and you're up 100%, 50% in a couple minutes, you can lose it all in a couple minutes. That's price action. That's volatility, right? So set profit stops at a base of like 30%, sell the moves, leave runners, right? And you need to understand in terms of trading, it's not just as simple. There is some like simple foundational things to follow, but in terms of a true expert at trading, right? Anybody could sit here and say, set a fucking profit stop or just get out and sell the moves. You need to truly, when it comes to being a true expert, you need to dissect the entire trade. You need to understand the entire trade's potential. If you dissect a trade and you understand the entire potential of the trade, you're going to do things slightly different than normally how you would trade. You would trade exactly how the trade is supposed to be meant to be traded, right? And with that being said, you do have to have some foundational pieces of just, basic risk management and things to stick by no matter what you think it's going to do. But in terms of breaking down structure, it goes with history repeating itself with similar cycles. It goes by measuring overall timing moves, right? Dissecting a trade can become very advanced. You can have a checklist. In terms of the checklist, like it's inside my fucking brain. I don't need to write this shit down. I can simply look at the chart and my brain will process everything. But, with that being said, when you become more advanced and more of an expert and you actually dissect every single trade that you're making, you're going to start to see that some trades make more sense to risk more. some trades make more sense to hold longer periods of times, because if you're in such a good fucking entry and the big move works out, the percentage gains are going to be fucking phenomenal, right? So in terms of like dissecting a trade, this is a whole separate video, but just some like basics on that, man. It has to do with measuring price action. It has to do with history repeating itself, capturing trends. It has to do with just measuring price action, measuring moves, 30-minute candlesticks, right? But even if you think it's going to have a massive move where you're just going to hold this for 30 minutes straight, or you're just going to hold this for an hour or multiple hours and you're quickly up 50, 100%, right? I get it. You want to hold for that bigger win because you're dissecting it and it makes sense. If you're on that level, you just need to understand no matter what the fuck you think this is going to do, you have to either set a profit stop, which is very wise at a 30% bare minimum, but sell into the moves at key levels, trim along the way and leave runners. Don't risk going green to red in that sense, man. Every single trade you make is going to be different. It's not going to be created equally. And it's your job to become better on dissecting which trades are going to be better setups, which ones make sense to hold. You know, a lot of people, they'll be in a trade. The entry will be fucking amazing. They'll have an amazing entry on their trade, but they'll quickly go up 10, 20, 30, 40, 50%. And they don't realize the potential of it. If they just hold for like 30 minutes, it could be a 400% win, but you also don't want to flip green to red when you're up 50%. So there has to be some sort of balance. That balance could be setting the profit stop so you don't go green to red. That balance could be trimming, selling half there, leaving the rest to run, right? And then getting stopped out for a small profit on the rest if it just doesn't work out. You have to have some sort of balance, but you truly have to dissect every single trade that it is that you're making, man. That's one thing you guys have to understand. Every single trade that I make, like there's some basic foundational rules. Like, yeah, you could set the profit stops. If you have like 20, 30%, you could add to winners, right? You could set the profit stops. Don't go green to red. Sell into the moves at key levels. There's some basic foundational pieces to ensure that you're not going to go green to red with proper risk management, right? But every single trade is different. And you have to be able to dissect which ones have the highest risk to reward ratios, which ones are going to have the entries where this puts you in a situation for the biggest percentage gains, where it makes sense to maybe leave half or 20% of runners to run, where it makes sense to hold for longer periods of time, man. Because if you're not trained in a way where you're trading on a dissected trade, you're going to make so many fucking mistakes. And that's not trading, man. I'm telling you, each trade is different. So if you dissect the trade for what it is, and once you understand what that trade can potentially be, if it works, it's going to repeat that history, that trend in a similar cycle, not to an exact fucking T. But if you know what it's going to do in a sense, and you're going to be right, in terms of once you get good, like 70, 80% of the time, and you know what it's going to do in a sense, you then understand what foundation to set up for you. Maybe it makes more sense to be leaving more to run. Maybe it makes more sense to be selling at certain levels here. Maybe it makes more sense to risk more, right? And set that profit stop a little bit, tighter down, rather than moving it up at like 30%, maybe set it at 10% and risk more, because it could be such a big fucking win. You don't want to get stopped out for, that profit, right? But you can always get back in. If you're green on a trade and you set a profit stop, it's impossible to go to red, right? And you can always get back in as well. But I just want to bring that point across, man. That's a whole nother lesson in terms of like dissecting a trade. But just always remember that. And that's what makes trading exciting, man. Because once you start to learn how to dissect a trade, you're going to trade less and you're going to understand how to trade that overall trade. It's going to become a little complex at first, but once you get that checklist down, I'm telling you, man, 30-minute patterns, history repeating itself, measuring the overall 30-minute candlestick moves, studying the overall patterns, studying the overall trends, measuring price action, understanding that not every single level is created equally. Big moves are going to fucking happen, right? So like measuring moves, you can see right here, if it reacts as a resistance at 582.30, we quickly drop to 580.70. That's a massive move in 30 minutes. So if it reacts to support, it's going to quickly spike above 2 points, right? Measure moves, measure price action, measure support and resistance. And then you're going to look at other levels. You're going to be laughing. You're going to be like, dude, this level is so fucking shit. There's no big move here. What a shitty fucking level, right? Trade the best setups to the best prices. Once you dissect a trade, you're truly going to understand what a best setup at the best price truly is. And you got to know the times. Market open is a great time to be trading. But the problem with market open is it lacks market structure. So if it lacks market structure, it's going to be difficult to trade directly at open, man. That's why I don't like the market open, because it lacks a sense of structure. Now, if there's a great game plan set up for the next day with the daily chart and there's strong confirmations in the pre-market or first 30 minutes to hour in the open, then it makes more sense. But for me, what makes sense when trading farther money options is to truly, it does make sense certain times to trade at the market open with my strategy. Like I did today, I gave it a perfect plan. The confirmations were there, but that's rare. That's like, maybe 2 times, 3 times a week. But on those plays, you could just leave runners and hold for hours, man, and just fucking make 400, 500% on the day with those fucking runners, right? But every single day almost, there's great opportunities during power hour. From 3 to 4 p.m., these contracts that we're trading, the zero dates, are getting ready to expire worthless. And we're buying them when they're further out of the money. And we're typically selling them in the money for the biggest percentage gains. It's kind of like a game on if the 30-minute candlestick is going to close bullish or bearish, right? And then with the patterns, with the strategies, we'll know the key times to enter, right? So SPX, we wait after 3:30 p.m. because that's when the contracts become cheap. Cheap means low risk. I don't like buying SPX before then. I'll buy SPY. SPY is much lower at that time before then, right? But SPX is going to yield you those biggest percentage gains, but you got to wait for the right times to trade, which is after 3:30 p.m., key times 3:45 p.m., algorithm 3:50 p.m., last minute move could be 3:55 p.m. past. There's been plays that went up over 1,000% from 3:59 p.m. within a minute. We've outperformed traders. So with that being said, man, just want to put you on to that, try to open your mind up a little bit. Start dissecting trades. Start trying to dissect your trades. Start measuring the moves, right? This is a very strong measured move. You can see right here, right? 584. It drops from 584 quickly to 582.50. That's a massive quick move. So it spikes back up to 584.50, and you're seeing a bearish 30-minute confirmation to the gap. Do puts, and we hit puts, right? And then you can see bearish confirmation right here at the same level. You could try puts, sell into the move, right? Big moves. Analyze big moves. Analyze the best levels. Analyze the 30-minute chart. I'm telling you, what's going to change the game for you is the 10-day 30-minute chart. And then once you start to learn the patterns, you start to capture these trends, capture these histories, man. Look, these patterns, you don't need to find them in fucking books. They're all in the chart. If we're trading the chart, we don't need to look at a fucking book with charts. We can just simply look at the 10-day fucking 30-minute chart, and we can have a strategy where we capture these trends, where these history is going to continue to repeat itself, man. In terms of day trading, I've noticed the trends tend to repeat themselves the best when it's short-term trends repeating themselves, right? Which is another reason where if you have a book and, these trends happened a very long time ago, and the trend just shows up here, it might not work. What I like doing is I like capturing a trend when it already works throughout the past 10 days, instead of going back and reading a book where this information is, very, very old in a sense, right? And, let's say in this book, it's saying it's a bullish pattern, and that bullish pattern hasn't appeared on this stock in like 100 days, and it appears for the first time. And since you read the book, you think it's going to work, so you try it and it doesn't work. I don't like doing that. What I like doing is I look at the 10-day, 30-minute chart, and I'm telling you, this works phenomenal. You look at the trends, right? You look at the trends on the candlesticks on the 10-day, 30-minute chart, and you start noticing patterns. And then once you see that these patterns are working, you can stack them. You can stack them with key levels. You can stack them with market structure. You can stack them with daily chart patterns, right? But when you see a pattern is starting to repeat itself in the past 10 days, I've noticed that it tends to keep on repeating itself in very similar fucking cycles, man. This red bearish candlestick in the middle, 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 this red bearish candlestick in the middle. Every single fucking time it closes red like that, it spikes for 30 minutes to a fucking hour. But it's not as simple as that. You have to understand market structure. Market structure is, okay, when it forms that, red bearish candlestick in the middle, it could be bullish based off the 10-day, 30-minute chart, but is it a break and retest? The stock would be a break and retest. The SPY broke above resistance, reacted as support, and there's a gap to fill above, right? So you got to learn the lingo, man. You got to learn the language. You got to learn the 10-day, 30-minute chart. You got to learn the stock. You got to learn the supply and demand. You got to learn the market structure. But I'm telling you, this works, and it's simple, man. But trading becomes exciting when you have the deck. You have all the cards in the deck, and you know how to dissect a trade. When you know how to dissect a trade, you're going to start thinking differently about that trade. On this one, I'm going to hold it for longer periods of time. On this one, I do have to play it safe no matter what I think it's going to do with this history repeating itself. But I do have to play it safe, set profit stops, and scale out to an extent. But I'm going to hold it for longer periods of time. I'm going to take bigger risk in a sense, right? So I wanted to put you on to that. Now, look, for those of you who are serious about trading alongside with us, you can see in the group, when I learn my trades, you'll start to see and understand, not on all of them, but on the vast majority of them, right? Because some trades are purely just based off of intuition and trading with your heart. But you'll start to see the deck. If you study the timestamps of my trades, the vast majority of them tend to be when a 30-minute candlestick is about to open or close, right? So within the last 5 minutes of the closing or the first 5 minutes of the opening of the 30-minute candlestick. And you're going to start to see how it is that I see by looking at my trades and also by watching the overall videos. That can help you out in a sense, right? So with that being said, just by that alone, you're going to be able to learn how to trade by trading, right? Because with my trade alerts, this is actually educational if you implement what it is that I'm teaching in these videos, and then you see exactly where it is that I'm in on a trade, right? So you're actually going to learn how to trade by trading alongside with us, and you can make money as with us as well, right? You can also follow the trades if you like. You can use this as a way of learning how to trade as well, because you're going to see everything as I'm doing in real time, right? And you can trade in Confluence with us, right? You can have your own systems, and then you can use my trades as confirmations if you like, right? If you want to confirm that, use me in a sense use my trades in a sense as a confirmation, right? You can do that as well. If you're bullish, you're looking for an entry, and then I enter a trade, and then you can enter a trade, right? You can do that in a sense as well, right? So what we're known for doing is in terms of what I'm known for doing is I trade the chart. When you trade the chart, you can apply that to anything. You can apply this to anything you want. You can apply this to futures. You can apply this to prop firms. You can apply this to trading shares. You can apply this to trading in the money options. But the reason why I'm trading far out of the money options is this is the best system that we've come across if you're trading with real money, right? So far out of the money options, the beauty of this is the contracts are very cheap, very low risk. On SPX yesterday, we were buying SPX calls the last 5 minutes, at 50 cents, and we were selling in the 390 cent range, right? You're risking $50 to make $400. So the beauty of this system is this is the only system, if you're trading with real money, if you're buying far out of the money option contracts, the 0 dates, right? Where you can put in your entire position size as your max risk per trade. So when you're trading, you need a max risk per trade. Are you going to risk like 2% of your account, 3% of your account, right? Your R multiple, right? Your max risk per trade, right? So the difference with us is your max risk per trade, since the contracts are so cheap and so low risk, can be your entire position size. So you're literally max risk per trade is every dollar you're putting into the trade. Therefore, you no longer need a stop loss, because if it goes to 0, the most you lose is your max risk per trade. So this has created a way where you no longer get stopped out. And in my experience, when I enter a trade inside of Team Roar, a dead play is a play that goes down 50%, right? So if we're down 50% on a trade, it can flip and go green and go up multiple 100%. But if we get stopped out, we don't make that multiple 100%. We don't get to sell the money if we get stopped out. So like I said, the contracts are so cheap, you should be able to put in your entire position size as your max risk per trade, meaning you can afford to lose your entire position size and you can make unlimited percentage gains. You can make multiple 100% profit gains every single month inside of Team Roar. We've been able to make at least 2 to 3 trades where we sell for a 1,000% return. And if you leave runners on other trades, there's been many other trades throughout the month that go up over 1,000%. It's just basic math. If you're sizing in, the same on every single trade and you make 1,000%, you can lose 9 trades in a row, 100%, right? And you could still be fucking green. You can lose 18 trades in a row, 50%, and you could still be fucking green, net positive. Where else can you do that? So we crack the code with percentages. We turn this into a game of percentages. We turn this into a game of with far out of the money options. You no longer need a stop loss. You're not going to get stopped out. So we don't use stop losses in some situations when it makes sense, because market conditions change on certain weeks or months where far out of the money option contracts aren't printing as well. So you're going to have to sell for bigger moves. You're going to have to sell for quicker moves, or you're going to have to go closer into the money if you choose to adapt. But you don't even have to be aware or adapt in that sense, because if you can't afford like a red week or a red month, you shouldn't be trading in the first place. There's 12 months in a year. If you don't have enough capital to have a red month, then trading is just not for you in a sense, I tell you. But anyways, man, look, we're buying far out of the money options, very cheap, very low risk, right? We're selling them deep in the money for the biggest percentage gains. There is no stop loss. The dead plays can come back to life, go in the fucking money. And, you don't need a stop loss. And sometimes we sell the moves for, if we're down 50% and it makes sense, we'll cut the loss. If it doesn't make sense, we'll hold it. In terms of when it makes no fucking sense, the power hour trades. Power hour trades, we usually just hold and let them go to fucking worthless, because if that 30-minute candlestick closes in our favor, it's gonna go in the money the vast majority of the time, and it's really gonna start to print like fucking crazy. Now, in terms of the winning aspect, we add to winners. When we're up, a small amount for us is like 5, 10, 15, 20%, very, very small percentage gains for us. We quickly add to winners. We don't like to add to losers. The vast majority of the time, we're adding to winners. We don't like to average our costs down, rather average it up a little bit. And then we set profit stops. Setting a profit stop will ensure that you do not go green to red and you get stopped out for profits when you're green. Setting a stop loss will ensure that you lose your fucking trades and you keep on getting stopped out, and you can never hold for a big fucking win because you're always getting stopped the fuck out, right? Setting a stop loss means that you're taking a big position size. If you're taking a big position size, then you're not going to be able to hold your trades because you're going to have a tight stop and it's going to get you stopped the fuck out. If you have a system that has the word loss in it, that means you're going to fucking lose. We've removed the fucking stop loss because we don't want to fucking lose. Now we added the fucking profit stops, which is something that nobody tells you to do. Nobody talks about setting fucking profit stops. We're like the only fucking people out here saying, set the fucking profit stop. You're up 30, 50%, set the fucking profit stop. You're not going to go back to fucking red and lose it all. No, fuck that. Set the profit stop, get stopped out for fucking green, and you can always get back in on the fucking trade. Instead of losing the gains, you can use those previous gains on a new fucking trade at the same fucking entry or even better. So, with that being said, we quickly add to winners and we move the profit stops up. The reason why we're going to move those profit stops higher is to ensure that we're getting the bulk of the move. We're collecting the meat of the move, right? If we just set a profit stop at 20, 30% and we're up 150% and we're still in the trade, you're going to want to move that profit stop the fuck up. That way we're not giving back the bulk of the trade if the market goes against us, right? So I'm telling you, we got the system, we have the strategies, we know the times. You ain't going to find a single fucking person out there, another fucking group out there that is trading as well as we are in terms of the far out of money option contracts. And we do have traders who are using prop firms to trade alongside with us. And you can do that. You can, if you want, you could trade a prop firm and you could follow trade, when we're in calls, you could trade the prop firm and you could do that in a way, right? With some people, they're trading shares, they're trading future contracts. Not everyone's trading far out of the money option contracts, but you can do that. Just understand in terms of the system with the far out of the money options, the special part about it is we don't need a stop loss and we have the entire day to hold for the contracts to go in the money. If we're down 80% on a trade, we have the entire day for the contracts to go in the fucking money. So we know the best prices to buy and sell. We have the whole fucking day for the contracts to go in the fucking money. If you put 2 and 2 to fucking together, this is simple. We've created something that is so fucking simple and so industry disrupting that when you see this fucking group, you're going to be like, dude, nobody I know of is doing this. I can't find a single fucking group out there that is running up these SPX trades 100%, 100%, 300%, 500%. They're timing these trades fucking perfectly. When they get in, they go up 200% in 5 fucking minutes. How the fuck are they doing this every single fucking time? I'm telling you, there's nothing like this. But like I said, the hardest part about trading is the sell. Dissecting the trade will help you with the sell. Setting the profit stops will help protect your profits. Moving the profit stop up will protect the bulk of your move. We're all adults here and we're all responsible for our own trading, right? Nobody's forcing you to enter every single trade that it is that we're making, right? You gotta decide on what level you want to use this program if you're in the overall program, right? Do you want to be a sheep and just try to blindly follow every single trade? Or do you kind of want to use this as a way in terms of your trading to combine it with ours, to use this as a confirmation, more of a confluence, right? Or you can get to an even higher level where you're actually learning how it is that I'm trading. There's levels to this, man. Everybody comes into a group with an intention. And there's levels in terms of how you want to go about this, man. But who do you think is going to be the best? It's going to be the people who put in the most work and the people who manage the risk accordingly and take self-accountability. I already told you, the toughest part to trading is the fucking sell. So, like I said, man, we're all adults here. You do have to have a sense in terms of where to sell. But I do alert my sells. Everything we're doing is alerted in real fucking time. But you have to take matters into your own fucking hands. And I'm telling you, in terms of the sell, in terms of the exit, that's the toughest thing left to master in terms of this overall system. So you need to be self-accountable, you need to be self-disciplined, and you need to be sound into the moves and send the overall profit stops, man. There's no excuses. If you have 50%, 80%, 100%, no matter what the fuck anybody says, what the fuck you think it's going to do, you have to manage your risk and you have to stay green no matter what the fuck. So if you want to trade alongside with us, if you want to join us, it's the first link down below in the description. Been trading for over 10 years. I started trading ETFs, then I switched over to penny stocks. Then I switched over to in the money options. Now I'm doing far the money options, right? So like I said, I've always been trading the chart, and the asset classes have changed over time. ETFs, penny stocks, fucking in the money options, and then far the money options. Everybody goes with far the money options if you know how to hold your fucking trades, because this is cheap, this is low risk, this is biggest percentage gains, this is highest risk to reward ratio. This is no fucking stop losses, man. The beauty of options is they give you fucking options, but I'm telling you, far the money option contracts give you unlimited options. They give you the most options within the fucking market, man. The way to disrupt the fucking market is to create a system instead of just trading the fucking chart. You need a system. Fuck the stop losses, set the profit stops, add the profit stops. The asset class, far the money option contracts, cheap, low risk. It allows us to do all this, man. That's the beauty of it, man. So find a system, man. You're not going to make shit on shares. You're not going to make shit on fucking penny stocks. You know, anything that's priced higher requires you to size in bigger. Anything that requires you to size in bigger requires you to set a fucking tighter stop loss. Over here, we don't do any of that. We tell our fucking members, dude, if your account is that fucking small, where your max risk per trade, you can't afford to lose that on a fucking trade, then don't fucking trade. If you can't afford to have your max risk per trade as your entire position size, meaning if you're trading one contract on SPX and it's 50 cents, you're risking $50, right? So if you have, $1,000 and you're risking fucking 50, that's 5% of your account. That's a bit more on the higher side. But if you're trading with a small account, you're going to be on the higher side. So in that sense, you could just trade SPY. You can go cheaper, 20, 30 cents, right? But if you have $2,000, you're literally risking 2.5% of your account, which is a normal risk trading with a small account. If you have a larger account, if you want, you can just risk less and less and focus on the dollar gains. That's completely fucking fine. How do you want to use the market? You want to try to compound it and go the tougher route? That's more for small accounts. When your account gets bigger, fuck the compounding, take the fucking dollars, right? When your account's small, compound percentage-wise. When your account's bigger, take the fucking dollars, but we're taking the dollars in a way that's very low risk because our max risk per trade is the entire position size of the fucking trade. You see how that rhymes? It's so fucking beautiful, but look, man. Anyways, you get the fucking point. If you're serious, you want to hop off here, you want to make some fucking money with us, you want to trade alongside with us, you want to learn how to trade, you want to trade in real time with us, it's the first thing down below in the description. You're going to see something that is so fucking unique and different. You ain't seen nothing like this before, man. Look at this, man. G-Roar, he had a phenomenal trade on calls, man. Look at this. 583 SPY calls at 11:33 p.m. at 40 cents, right? So at 11:33 a.m., he bought those calls. So if we go to those overall calls at 11:33 a.m., you're going to see, man, look at this fucking trade. This was absolutely fucking phenomenal, man. Literally right here at calls towards the lows. And we held, and it went from fucking 30 all the way to 160. You see how many fucking trades I'm showing you that are going on multiple 100% profit returns? You think this is by accident? You think this is by fucking luck? No, we're professionals at doing this. We're truly chosen. We trade with our hearts. We trade with our intuition. We know what works. We've been in the market for over a fucking decade. It's like, dude, we got the fucking system. And I'm telling you, to acquire this fucking system, most people don't got what it fucking takes, dude. You should have seen all the fucking shit I had to fucking go through, all the fucking blown up fucking accounts, all the fucking people backstab. It's so many fucking things to acquire everything it is that we're doing, man. This takes fucking time. This is a lot of fucking hard work. This is a lot of fucking dedication. I'm telling you, man, just study the fucking history of this overall channel. You'll see the fucking evolution, man. It wasn't too long ago, a couple years ago, making these small ass fucking gains, 5, 10, 20%. And then all of a fucking sudden, I become a fucking SPX legend, making multiple 100% profit returns, making 1,000% profit returns. Welcome to the fucking top, man. And it happened so fucking quickly. It was one of those things, man, you hear about it like fucking 10 years. You hear about it all the time, man. People work like 10 fucking years. And then in terms of like reaching the fucking top, it happens overnight. Now, the hardest part is if it happens overnight, if that's how success hits in a sense, the toughest part is fucking staying there, man. When I mastered this, it literally happened so fucking quickly, but it took for fucking ever to figure it out, man. It's like I had the pieces to the puzzle, but once the puzzle finally clicked, it's like it happened over the fuck night. And then from there, I started to take time to really understand what it is that I truly have and to become better and better at, because once you achieve a new style very, very quickly, but you have a lot of experience before that, it's going to take you a little bit more time to really understand what it is that you have and to really master that. But now I'm at that level where it's like I just have this down to a fucking T, man. It's like every single fucking day, man. We rarely have any red days. The percentage gains always outweigh the percentage losses. And we have the highest win rate in the game doing this, man. So we're doing everything in our fucking power to put small accounts in a positions to fucking win and to make the rich fucking richer, man. And rich people trade this way because they prefer to risk less, right? Take smaller sizes and make bigger dollar gains percentage wise. And that's what I would encourage everyone to learn how to do, man. You need to learn how to take smaller position sizes, let the percentage gains do the work for you, and make more dollars than everyone else, putting in less money by letting the percentage gains do the work for you. And then once your account becomes massive, you can grow it in a way where it's more of you're risking less and less and you're taking out those nice dollar gains. But when your account's small, you're more focused on compounding the account percentage-wise, which is a lot tougher to do versus having a larger account and just trading smaller and not growing it as big percentage-wise. But it's a lot of fucking money if you have a lot of fucking money in the account. And like I said, rich people do it this way because they want to put in as little as possible to make the biggest dollar gains, man. Look, you want to buy in the money option contracts that are extremely high, that are going to decay like fucking crazy, that are only going to go up small amounts? Or do you want to do what we're fucking doing? Hold trades a little bit longer, understand the fucking system, cheap, low risk, biggest percentage gains in the market, lowest barrier to entry. So if you want to trade with us, it's the first link down below within the description. We are going to absolutely crush it heading into the market tomorrow.